Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the podcast, host Craig Jeffery sits down with Bruce Bent II, CEO and President of Landing Rock Cash Management, to discuss a primer on insured deposit accounts. They share foundational knowledge around CDs and insured deposit accounts, short-term investment options, federally insured cash management accounts, and more. Listen in to this insightful discussion to learn how to position yourself and your company for financial success.
Welcome to the podcast, Bruce.
Thanks for having me.
It's good to talk about investments and insured deposit accounts, but as we begin this discussion, I was wondering if you could give our audience a little bit about your professional background.
Sure. I've been in asset management and financial technologies, financial services for about 30 years. A number of different companies, eventually running them, and in particular have spent a lot of time in cash management. And when I say cash management, I mean from an investment perspective. I mean where you invest cash. I'm in New York, and I've worked out in New York for those 30 years.
I think in the show notes, we're going to put some information about your company, Landing Rock, and so people can follow the link to learn more. But since we are going to be talking about some short-term investment options, your company provides some of those. I was wondering if you could give us just a quick overview on Landing Rock.
Sure. Landing Rock Cash Management is an affiliate of Double Rock Corporation. Double Rock is a holding company for financial services and financial technologies companies, Landing Rock being one of those. And Landing Rock was established as an online cash management provider. It's highly automated, and it's focused on a particular category of cash management investments, which are federally insured cash management products. So that's all Landing Rock does. For example, we do not offer money market mutual funds. We only offer federally insured products.
Now I want to turn the conversation over into the core of what we want to talk about, which is insured deposit accounts and to some extent CDs. I was wondering if you could give us some foundational knowledge or a primer on CDs and insurance deposit accounts. What are these vehicles? Where do they play in the investment mix? So maybe you could start with what are certificates of deposit or CDs?
The foundation of this, again, is federally insured cash management products. So what does federally insured mean? That means if you go to a bank, you see the FDIC logo in the window of the bank. That is the federal insurance that is protecting your deposits at the bank up to $250,000. And credit unions also have something similar with the National Credit Union Association. Same thing. It's a federal insurance up to $250,000 per account holder, or we say per tax ID. So certificates of deposit are one of those things, one of those investment vehicles that offers this federal insurance. Also, a regular deposit account, if you have a checking account or a savings account at a bank, that is also federally insured up to $250,000.
Why would a company, a university, an endowment, or someone else use an insured deposit account? What's the purpose of that, either generally or in comparison with some of the other investment vehicles that exist?
The way that a insured deposit account from a company like Landing Rock Cash Management works is that we have a few basic goals. One is to provide the federal insurance, right, which is the protection, the security. Another is to provide a competitive interest rate. And another is to provide excess federal insurance coverage if it's needed. So remember I said the banks and the credit unions are limited to $250,000. So accounts like the Landing Rock Insured Deposit Account links a whole lot of banks and credit unions across the country together, and we break up your deposit into $250,000 chunks. So for example, if you had $1 million with Landing Rock, we would break that up amongst 4 banks at $250,000 apiece, and therefore you have one account with us, but you have $1 million of federal insurance coverage. So one of the reasons that folks open up accounts with us is because they have cash in excess of the $250,000 and they want or are required to have federal insurance cover the entire thing. So you mentioned public funds or foundations, endowments. Public funds, school district, for example, often has or always has investment guidelines, and it often requires them to have their cash fully insured. So they can either go out, if they have that $1 million, they can go out and open up 4 bank accounts on their own and deal with 4 separate bank accounts. And then they can try and negotiate the best interest rates with each one of those banks, and then they can deal with their deposits and withdrawals with those 4 different accounts. And maybe they can do that with 4 accounts. But when you get up into 2 million, 5 million, 10 million, 20 million, it's really inefficient. So they will come to a company like Landing Rock and open an up account with us. We manage all those banks, but they only have to deal with 1 account.
These are, because they're federally insured, federally meaning by like the FDIC, so it's only U.S. dollar based, only offered in the U.S. Is that correct?
From a market perspective, some banks will take foreign clients, which can benefit from the federal insurance. But from Landing Rock's perspective, we only open accounts for U.S. entities and persons. So we don't accept foreign accounts. And all the investments are in U.S. dollars.
Okay. So on to insured cash management accounts in some more detail. You mentioned some of the elements there. Transaction limits of $250,000 for insurance. I know there was a time where FDIC had bumped it up to unlimited. Now it's back to $250,000. And your comments about if you got 2 million, you might require 8 accounts, and that becomes inefficient or unwieldy to open up all these accounts. So I guess as we talk about the headaches or the challenges of managing short-term cash in this regard, when you need insurance coverage, I was wondering if you could talk about these insured cash management accounts from the traditional perspectives of safety, liquidity, and yield, as well as efficiency. I think you started talking about efficiency from, you don't have to open up multiple accounts because there's vehicles like through your company to invest in multiple banks or have these type of investments spread out and diversified, making sure you have coverage. But there's probably more to the efficiency rather than just opening the bank accounts. Maybe you could begin there, and then maybe we could step through safety, liquidity, yield.
What you mentioned in terms of risk, right? So risk can be investment risk. That's where you're talking about, am I going to lose money? Am I going to lose any of my money? And that's where the federal insurance comes in, and why we make sure that it's $250,000 per bank so that we don't exceed the maximum coverage per bank. In addition, in the Landing Rock Insured Deposit Account, the customer has the ability to deselect banks that they may already have money with. So they'll see a list of all the banks that we can put their money in, banks that we have relationships with, and they can say to us, oh, you know what? I already have an account at Bank of America or Chase or XYZ Community Bank. click the box, don't send any of my money there, right? Because if we did, we'd have $250,000 there potentially, and the customer would have something in addition to that, and therefore they'd be over the limit. So that's another aspect. We're managing the investment risk, right, using the federal insurance coverage. Another risk that we're managing, another advantage of this type of account is we're managing the liquidity risk. The insured deposit account provides for daily liquidity. If you open up a bank checking or savings account, sure, you're going to have daily liquidity. If you buy a certificate of deposit, if you buy a CD from a bank, you're not going to have daily liquidity. And sometimes people do that. They'll buy a CD because they want a better interest rate. By going through a company like Landing Rock, they can still often, not always, but often get a better interest rate because we're buying some of those CDs on their behalf, but we're still providing daily liquidity.
How does the daily liquidity work if someone invests $2 million, it's going into 8 different banks? I'm assuming it's going into something like a CD that the reason you're getting the higher interest rate has to do with it's tied up for a longer period of time. How does daily liquidity work through this type of cash management account?
The banks see Landing Rock and companies like Landing Rock as providers of wholesale funding or wholesale deposits. And what that means is if a bank has a need for deposits, they've got a choice. They can put up signs in the window selling CDs or offering a high interest rate for a savings account if you deposit at least $100,000. And they can sort of let the community bring them their deposits. Now, obviously, we have an electronic community today as well. So there is some, we're not just talking about brick and mortar advertising. There's advertising on the internet or newspapers, whatever else they do. But another choice that banks have is to go to a company like ours and say, hey, we have a need for $25 million in deposits and we need it in this week. Can you guys provide that? Companies like Landing Rock would be are very efficient providers of wholesale funding to banks. And in exchange for that efficiency, the banks will pay us a higher interest rate than they will the folks that are buying the CDs and opening up deposit accounts because they saw the signs in the branch window. That allows us to pass on a higher interest rate typically to our customers, and we still have the luxury of daily liquidity because oftentimes we don't have to buy a certificate of deposit. The bank won't ask us to tie up the money with them for 3 months, 6 months, 12 months because we brought them that $25 million in a few days as soon as they wanted it, right? So that's one of the things that we can command. You can call it buying power. We have more buying power than the individual customers do. That's not to say we don't buy CDs. Occasionally we do, but we like to be very liquid as well. And so we don't do a lot of purchasing of CDs. If we do, it won't make up more than 5 or 10% of our total deposits.
Okay, so we've covered much of safety, quite a bit of liquidity. You talked about yield and interest rates and how you can get rates that might be, at or above market. Maybe you could talk about the yield and how that works, maybe comparing it to things like money market funds, which also have daily liquidity. How are these compared?
There's a lot there. The short answer is that the interest rate on insured deposit accounts like ours fluctuates just like money market mutual fund yields fluctuate, and they're usually pretty close to one another, except when you get to the turns in interest rate cycles, right? So when you reach the bottom of an interest rate cycle, which hopefully we're at now,
I think the Fed is indicating that we probably are close, right?
Right. They're talking about that. So if interest rates are going to start coming up after having gone down for 2 or 3 years now, or whatever it's been, then you might see more of a disparity in rates, the interest rate on insured deposit accounts versus money market funds. And then the same thing when you reach the top of the cycle and interest rates have peaked and they're starting to come down, you might see more of a disparity. But in general, they're pretty close. However, the market for money market instruments is still more efficient than the market for deposits. So if you're buying treasury bills and you're running you're investing in money funds, and the money funds are buying treasury bills and things like that, they're not going to find a lot of anomalies. They're not going to find some investment that's paying a rate that's way above market. However, when you're talking about the market for deposits, you're looking at banks nationwide where some of the bank's customers are net borrowers and therefore they need more deposits, and other banks' customers are net depositors and they don't have a need for deposits. So companies like Landing Rock can find these anomalies in the market for deposits and sometimes really find some nice interest rates that are significantly above market and pass some of that on to the customer.
Anything else on the efficiency side? I guess I'm gonna ask this question partly because I had a misunderstanding of how these cash management accounts worked. I guess I had seen them as a consolidated way of investing in CDs without having to go to 20 or 30 banks. If you had a lot of money to put away, and it would just buy all the different CDs. But what you're saying is there's it's not just savings about the account openings, it's the whole distribution reporting. Maybe you're not saying that, but that seems to be the case. I think the value on the efficiency side is a little cleaner there. Is there anything else on the efficiency side that is worth noting for corporate investors on short-term funds?
Some of the other efficiencies of a insured deposit account that consolidates multiple banks into one account is the ability to enter transactions in online. So you can go into the account, click a button, transfer money in or out. You can link outside banks or brokerage accounts to that one account. If you have other folks, for institutions in particular, there's a need for reports, there's a need to share statements, there's a need to share access to the accounts. There's also sometimes a need to have different types of access, that some folks are on the corporate resolution and are qualified to enter transactions. Some folks need to see the information, but they're not qualified to enter transactions. So all those little things which are important are also part of these types of accounts typically.
Yeah, excellent. So Bruce, I think this has been a really good primer on the cash management accounts and some of the distinctions between them and CDs by themselves, as well as some of the similarities and differences with institutional money market fund accounts. I look forward to our next conversation. We'll get into some additional details on insured cash management accounts.
Great. Thank you very much for having me. I appreciate it.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.